Welcome to the deep dive. Okay, we're jumping straight into a real head-scratcher today, a financial paradox that might make you rethink what currency value even means.
Absolutely.
So here's the big question we're tackling. How come the Kuwaiti Dinar, the KWD, is always the highest valued currency globally?
Yeah.
Like over $3 for 1 dinar.
Right.
When the US dollar is, well, it's the king, isn't it? The main currency for trade, for reserves, everything.
It really is the ultimate mismatch, yeah. You've got this huge unit value versus massive global scale. The dollar, it's what the world uses. But the dinar, arguably the world's most stable.
Okay, so that's our mission for this deep dive then. We're digging into these Devin McClarty LoopSpeak documents
Great analysis in those.
to really pull apart the KWD's design. We want to understand how this idea of structural intelligence actually creates what they call monetary sovereignty.
Love that phrase, structural intelligence. It really frames it perfectly.
It does. And the McClarty docs give us two key concepts. First, this monetary sovereignty idea.
Right. Which is basically a nation's power to control its own economy, yeah.
Wow.
To insulate itself from, say, what the U.S. Fed is doing or other big external pressures.
Exactly. Independence. And the second concept.
That's structural intelligence, and this is really the core doctrine. It argues that real economic power doesn't come from just being big or globally used.
Okay.
It's forged, actively built through strong, resilient internal architecture. It's deliberate design.
So the KWD isn't just valuable because of oil.
Oil is crucial, obviously, but the structure is the reason it holds that value so consistently. It's like a masterclass in the engineering stability, a blueprint, really, for anyone who values resilience over just, market share.
Okay, let's unpack that blueprint then. Because, yeah, the price tag alone doesn't tell the story. How do they do it? How does the KWD achieve this, frankly, uncanny strength year after year?
It boils down to the architecture of control. Simple as that. The sources talk about their basket peg system, and this is critical.
Basket peg, okay.
It's not a free float where the market just batters it around, and it's not a rigid fixed peg either, which can break under pressure. It's designed as a controlled float.
Controlled float. So flexible but managed.
Exactly. The whole point is to buffer shocks from outside. It forces diversification away from relying on any single foreign currency's fate.
Ah, so they anchor the dinar, but not just to the dollar, like many do. It's tied to a whole group, a weighted average.
Precisely. Distributed risk built right in.
Smart.
Yeah.
So what's in the basket? Which currencies are carrying the load here?
Well, the details really show the strategy. The US dollar is still the biggest chunk, roughly 65%.
Okay, still dominant.
But crucially, it's buffered. The euro's in there, maybe around 17%. The Japanese yen, about 8%. And then you have the British pound and a few others making up the last 10% or so.
And the results, does it actually work?
Oh, absolutely. The proof is right there in the numbers. The McClarty documents point out, get this, for 18 straight years.
18 years.
The exchange rate has basically been 1 KWD equals $3.26 plus or minus just 1%.
Wow. Okay, that kind of stability is, well, it's almost unheard of today, isn't it?
It really is definitive proof the system works as designed.
But hang on, 18 years of that kind of tight control. Does that focus on stability, on architecture, maybe limit their agility, or even slow down domestic growth? Isn't that usually the trade-off? Control versus dynamism.
That is the central trade-off, you're right. And it really highlights the philosophy behind Kuwait's central bank. McClarty calls it prudent appreciation.
Prudent appreciation. Okay.
The main goal isn't maximizing scale or growth speed. It's preservation. They seem willing to accept maybe slower nominal growth in exchange for that ironclad stability.
And that stability must attract a certain kind of capital, right? Long-term, not jumpy speculators.
Exactly. Capital looking for safety and predictability.
It reminds me of that quote from the sources you mentioned. While the U.S. dollar circulates, the Kuwaiti dinar compounds through discipline, design, and oil-backed income. Compounding versus circulating. Very different ideas.
It leads perfectly into that core contrast, doesn't it? The maxim they use is brilliant. If America prints power, Kuwait prices it.
Ooh, I like that. Prints power versus prices it.
It sets up the whole structure versus scale debate, two totally different ways to think about monetary strategy.
Okay, this is where the architecture really snaps into focus. Let's break down how the sources compare the KWD built on structure and the USD built on scale.
Great. So for the KWD, the source of value is its structural design and control, that internal engineering.
Got it. And the USD.
Its value comes from global scale and liquidity, just the sheer size and the fact that everyone uses it.
So different foundations. What about the core concepts?
Kuwait's is scarcity as strength. They deliberately restrict supply, keep the unit value high, it's controlled.
Right. Limited edition, almost.
Sort of, yeah. Whereas the US dollar's concept is global usage and trust. It needs an expandable supply to grease the wheels of global trade.
And what do they fundamentally represent then? What are they selling to the world?
Well, the analysis puts it like this. One US dollar buys trust. One Kuwaiti dinar buys proof of structure.
Trust versus proof.
Interesting. Totally different exports. The U.S. exports confidence, this huge open system that everyone can plug into. Kuwait exports control, this tightly managed, resilient system.
One based on being everywhere, the other based on being impenetrable. External dominance versus internal resilience.
You nailed it.
It really makes you think about what a currency is for.
Yeah.
The dollar serves the world's trade. The dinar seems built purely to protect Kuwait's own purchasing power.
Exactly.
But okay, if this structural intelligence is so powerful, when did it really get tested? Where's the proof it works under fire?
We need to look at 2007. That policy move is like the definitive case study, the proof of concept for structural intelligence in action.
Okay, 2007, what happened?
Well, for a period before that, they'd actually made a, let's say, temporary and maybe ill-advised decision to link the dinar only to the US dollar. Drop the basket for a bit.
Ah, okay. And the dollar started weakening quite a bit in the mid-2000s, didn't it?
It did. Significantly. And suddenly, that direct peg became a huge liability for Kuwait.
How so? What was the impact domestically?
They started importing inflation. That's the key phrase the sources use.
Importing inflation, because their currency was tied to a falling dollar.
Precisely. So the cost of anything they imported from outside the U.S., think European machinery, Asian electronics, started soaring in dinar terms.
Ouch. So it directly hit people's wallets and threatened that stability they've prized so much?
Exactly. Their core mission, preservation, was suddenly under threat because of an external factor, U.S. monetary policy.
So what do? How did they fight back? Did they hike interest rates like crazy?
Nope. That's the beauty of the structural approach. They didn't just react with traditional policy tools. They, as the sources say, shifted structure.
Shifted structure.
They simply reactivated their original design. They dropped the temporary USD-only link and went back to their diversified currency basket.
Ah, so they didn't fight the dollar's fall. They just structurally sidestepped it.
That's a great way to put it. They activated a pre-planned defense mechanism built into the architecture.
That is monetary sovereignty demonstrated right there.
Yeah.
They kept their own house stable, regardless of what the U.S. Fed was doing, just by flipping a structural switch.
It was elegant, really. The stability held because the system was designed for that exact scenario. It wasn't a panic move. It was the system functioning as intended. Credit to the Central Bank of Kuwait's design.
Okay, so for you listening right now, you might be thinking, wow, I want some of that stability, that compounding value in my own portfolio.
It's an attractive idea for sure.
But here's the catch. The KWD is, by design, pretty much off limits for speculation, especially on retail Forex. That control, that scarcity is part of the point.
Right. They don't want hot money flowing in and out. It defeats the purpose.
So if we can't just buy the currency easily, how can we maybe replicate or at least mirror the thinking behind it? That structural intelligence.
Well, this is where the McClarty analysis offers something practical. The idea of a synthetic dinar hedge.
Synthetic dinar hedge. Okay, intriguing. How does that work?
Since getting the actual currency is hard, you try to mirror the logic of its value. The core idea is to combine two specific types of exchange-traded funds, ETFs, that represent the two pillars supporting the dinar's strength.
Two pillars, like the income source and the structure itself.
Exactly. You need both engines.
Okay, break down those engines for us. Component one.
The first part is what the sources call the oil engine. For this, they suggest something like the OIH ETF.
OIH, oil services.
Yeah, it tracks oil service and infrastructure companies. This gives you exposure to that physical, commodity-backed income stream, the oil wealth, that underpins the whole Kuwaiti economy and enables that steady compounding.
Okay, makes sense. Get the oil engine. What's the second component, the one that mimics the structure?
That's the PEG engine. Here, they point to the KWT ETF.
KWT. That's an ETF for Kuwaiti stocks.
Correct. It tracks local Kuwaiti equities. This represents the domestic economic structure, the businesses and assets inside Kuwait that the strong dinar peg is designed to protect and stabilize.
Ah, I see. So you combine the oil income driver, OIH, with the thing being protected, KWT.
Precisely. By holding both, you're essentially replicating the core principles. Commodity backing plus structural integrity. You're investing in the system that creates the resilience.
So it's definitely a step beyond just buying a random stock or commodity. It's about investing in a financial logic, an engineered approach.
Exactly. You're prioritizing building a resilient setup, mirroring that philosophy. The intelligent structure can create more durable value over time than just chasing scale.
Okay, so wrapping this up, what's the big takeaway here? What's the lesson from the dinar model, according to these analyses?
I think the ultimate lesson is that real monetary power doesn't have to come from being the biggest player or relying on volatile global markets. It can be deliberately engineered through smart, disciplined internal architecture.
Building strength from within.
Yeah. And the core philosophical insight that comes through in the McClarty docs is simple but really profound. Control is currency. Managing your internal structure well, that's where the real power lies.
Control is currency, and it links back to that preservation goal. The dinar's value isn't in what it trades for. It's in what it refuses to lose.
That 2007 decision is the perfect example. They refused to lose domestic stability just because the dollar was falling.
Yeah.
They chose control.
It really is a strategy fundamentally about preventing loss, built on that disciplined architecture.
Absolutely.
Which leaves us with a final thought for you, the listener, to maybe chew on. If the ultimate goal of monetary design, at least in this model, is preserving wealth and preventing loss, what kinds of structural elements could you think about building into your own financial life, your own system, to prioritize that kind of resilience over just chasing scale or the highest number? Think about that idea. Structure salary.
That's a great question.
And maybe what other smaller, maybe overlooked but resilient nations might have engineered similar structural advantages into their own systems that we should be looking at.
Yeah, don't just look at the price tag of an asset. Look at the architecture that makes it stable or unstable. That's the real lesson, the non-obvious info from the Kuwaiti Dinar.